So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. We're going to be mixing fundamentals, and we have lots of fundamentals today with technicals. And the first chart you have on your screens is Euro USD's 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated, and we're going to be stating when we're switching. Now, on the fundamental side, we highlight the Fed's interest rate decision yesterday as it took the markets by surprise. It was characteristic how the US dollar weakened, and that was across the board. And it would be interesting to note that the bank, remained on hold as was widely expected. That was not the issue. Yet overall sounded, I think, more dovish than what the market may have been expecting, or if you prefer, the market may have been expecting a hawkish Fed that didn't come out, and on the contrary, the bank sounded dovish. Now, if we see it on a more technical level, then we would be noting the weakening of the US dollar, as we have mentioned. It's interesting. Let's drill into the 1-minute chart to see the market reaction on the pair at the time of the release. Allow me to go a little bit back here. And you can see the market reaction right here. We're talking about the jump of 60 pips upon release and the following 2 minutes. And it was characteristic that even despite correcting a little bit lower, the upward motion regained traction and actually moved higher and higher and higher and stabilized above the 1.0865. Now, on a fundamental level, back to the 4-hour chart, I would be noting here that, we had already the Fed's interest rate decision. Euro traders now are focusing on the release of ECB's interest rate decision. The bank is widely expected to remain on hold, keeping the refinancing rate at 4.5%. That's not the question. On the contrary, that's considered to be an open and shut case. The big question is, what are the ECB's intentions? The market is currently pricing in 6 rate cuts in the coming year. That would practically bring the refinancing rate down to 3%. And may I also add here that it has a very dovish predisposition about the bank, given also that we have the HICP rate slowing considerably down, but it's not only slowing down, it has almost, or if you prefer, nearly reached ECB's target of 2%. The preliminary release for November showed HICP rate being on a year-on-year level at 2.4%. It's very, very close. At the same time, we have recessionary pressures for the Eurozone economy, which are more or less pushing the ECB to start cutting rates and ease the financial environment. Yet at this point, I would be noting also the struggle within the bank as such. We have the hawks versus the doves. We have, if you prefer, the northern economies against the southern ones in the Eurozone. It's characteristic that, say, for example, the Germans, the Dutch, I would be also including the Finns, seem to be leaning towards a more hawkish side and slowing down the pace of any possible rate cuts. On the flip side, southern states tend to favor a more aggressive rate cutting policy. So there is a struggle within the bank about what direction and what pace. Actually, the direction is pretty clear. Rates are to go down at some point next year. But the question is at which pace and what will be the starting point. The market, for the time being, expects the bank to start cutting rates as early as March next year. And should the ECB actually signal that it's ready to start cutting rates early, we may see the market's expectations practically being verified, and that could drive the euro lower, i.e., cause euro USD to drop. On the flip side, should the hawks have it, and there is a relative dovishness, however, it's quite moderated, then we may see the euro getting some support and allowing that for euro USD to jump even higher. For the time being, on a technical level, let's definitely correct the 1.0865 to a support line, given that the price action broke above it and now has been turned into a support line. Let's go hunting for a new ultimate resistance level. Adjusting the chart, going back. And we have a touch here. Sorry. Could go a little bit higher, just here. Let's fix it at 1.1275. We're adjusting the chart, zooming out again. Let's correct and reposition the labels. Starting with the S3, which is now being placed at 1.0615. The S2 at 1.0750. The S1 at 1.80865. The R1 first resistance line to be set at 1.1005. Sorry. The R2 at 1.1140. And the R3 at 1.1275. Locking everything in. Let's talk direction. Now we have a couple of elements which are worth noting here. Definitely the first element which is worth noting is the breaching of the S1, R1, used to be the first resistance line, the 1.0865, now turned to support. That tends to imply a bullish outlook. On the other hand, though, we would be noting that there has been some considerable slowing down of the bulls. And at that point, we would be also noting that we have an RSI indicator which jumped above the reading of 70, implying a strong bullish sentiment on behalf of the market, which could allow the pair to rise even further. On the other hand, the fact that the RSI indicator has reached above the reading of 70 may also imply that the pair has reached overbought levels and may be ripe for correction lower. Similarly, the fact that the price action has breached the upper Bollinger Band right here, you can see it by the jump, that may imply that the pair has reached also overbought levels and may be ripe for correction lower, or at least that the bulls will be slowed down somewhat. Should the bulls be allowed to continue higher, I wouldn't be surprised to see the price action jumping, breaching the R1, 1.1005, and definitely I would require a higher peak than this one. In such a case, the next possible target would be the 1.1140. However, that's pretty far-fetched. We're talking here about a 200 pips jump. That's, in my opinion, a little bit overstretched. Most probably, should the bulls be allowed to continue to lead the pair, I would expect the pair to test, if not breach, the R1 1.1005. On the flip side, should the bears take over, I wouldn't be surprised to see the price action dropping, breaching the S1 1.0865. And actually, I would not be satisfied by just reaching the prior level of the price action before the release of the Fed's interest rate decision, I would expect the pair to breach also the S2 1.0750. That's for a bearish outlook. Other than that, should the pair remain in a sideways motion, we may see it maintaining that just above the S1 1.0865. The interesting part here is that the ECB's interest rate decision is expected to be key regarding the pair's direction, and market expectations are very, very dovish for the ECB. It's, if I'm not mistaken, the most dovish expectations about the central bank intentions in developed economies. It's characteristic that should the ECB actually proceed with cutting in total 150 basis points in the coming year, that would bring the interest rates to the lowest level maintained among developed economies. It would be lower than the Feds, it would be lower than BOEs, it would be lower than RBAs or BOCs. So it's quite bearish here. And at this point, it would be interesting to have a look at GBP USD cable, given that we get a bit earlier than the ECB also BOE's interest rate decision. Now the picture is more or less the same. I would be noting that the pair was able to breach the R1 1.26. So let's turn this into a support line. Let's go hunting for a new ultimate resistance level. Unlocking the chart, going back. It's a little bit wide, but I don't mind. We could be setting one here as well. My opinion, it could go higher. That would be in red, the 1.2995. And the next possible target would be here. That would be an R4 at 1.3140. We're setting practically quite tight levels here. And hence I would be also correcting the support level a little bit higher to catch this peak here at 1.23. Okay, let's correct also the labels. Starting with the S3, which is now being placed at 1.2275. Sorry, my bad. Give me a sec. This should have been corrected to 1.23. There you go. With the S2 at 1.2475. The S1 at 1.2595. Let's lock in the support lines. There you go. And starting with the R1, which is being placed at 1.2720. The R2 at 1.2870. And the R3 at 1.2995. Locking also the resistance lines in. Done. So let's talk direction. Definitely the fact that the price action has breached the 1.2595 resistance line now turned to support. We're talking about the S1 here, and we're talking about this breach. The RSI indicator has risen and has actually approached the reading of 70. It's still below it. It's at 63, but it came pretty near. Tends to imply a bullish sentiment on behalf of the market. And it was also indicative of how high the pound jumped by the fact that cable was able to breach the upper Bollinger Band and force the bands to widen, implying that there may be a slowing down of the bull somewhat, but overall the bullish tendencies seem to continue. Now, we have mentioned and discussed a little bit about the ECB's interest rate decision. BOE's interest rate decision seems to differ. And it differs in the following sense. On the one hand, we have an inflation in the UK, which, okay, it slowed down considerably in October, but it's still way above the bank's 2% target. It's above 4%, it's at 4.2 if I'm correct. Hence, it may actually force BOE to maintain a certain degree of hawkishness in place in the accompanying statement. And I would be adding that the employment data, the latest for October, tend to also allow for such a scenario to materialize. So we may see the bank remaining on hold as the market expects. However, the tone of the accompanying statement may not be as dovish as was the Fed's yesterday, or maybe the ECB's today. So we may see interest rate differentials being more in favor of the pound. For the time being, we have to note here that the market expects the bank BOE to actually start cutting rates from March onwards and proceed with a total of 5 cuts, 25 basis points cuts, within the next year. In our opinion, we may see the bank prolonging the beginning of their interest rate cuts. So we may see it more or less citing the June meeting most probably as the most suitable date to start cutting rates. Or, sorry, the May could be also a possible target. March may be a little bit premature. Should that be the case, should the bank actually sound a little bit more hawkish than what the market expects, then we may see the pound getting some support, being able to jump higher, breach the R1 1.2720, that's for cable, and start aiming for the 1.2870. On the flip side, should the bank actually sound dovish, given that there are some quite extensive words about the economic outlook of the UK, and given that the CPI rates have already started to slow down somewhat, then we may see the pound retreating, and that would be pushing practically cable lower. And in a bearish outlook for cable, I would require the pair to breach the S1 1.2595 and start aiming, if not actually testing, breaching the S2 1.2475. Okay, let's have a look now at USD JPY. Interesting move. Now the pair dropped broke the 140.40 support line, broke consecutively also the 142.50 support line, and a very happy analyst, it corrected higher, just being short of the 140.85 support level, and the last level remains intact. So we keep that. The rest has to be turned into resistance lines. Let's go hunting for new support levels. Unlocking the chart. Okay, we have an ultimate support level definitely here. And I would be noting also this true here. I would be noting it because we had also tests to the upside, which make it pretty valid. Readjusting the chart. Starting with the S2, which is going to be placed, give me a sec, at 139.10. Locking it in. And the S3 at 137.25, which should be also colored in green. Let's correct also the content of the labels. Starting with the R3, which is now being placed at 146.25. The R2 at 144.40. The R1 at 142.50. The S1 at 140.85. The S2 at 139.10. And the S3 at 137.25. I think in this case, the bearish intentions are clear. We had a wide drop of USD JPY, breaching both the 144.40 and the 142.50 support lines, both now turned to support. It's characteristic that before correcting higher, it was also breaching the lower Bollinger Band, which forced the pair to actually correct a little bit higher. And that was all before it actually, after it tested the S1 140.85. The bears are showing their teeth here with the RSI indicator being clearly below the reading of 30. It's actually right now at 22.3, pretty low. So we tend to maintain a bias for a bearish outlook. I would be drawing a downward trend line, yet to tell you the truth, I would like to see where the correction higher, which is in place right now, is about to end, and the downward movement to restart. That would allow me to have a second confirmation point exactly to draw the downward trend line. In any case, we expect USD/JPY to breach the S1 140.85 and start aiming for the S239.10. I wouldn't be surprised to see it being breached as well. On the flip side, Should the bulls take over and take the markets by surprise, we may see the price action breaching the R142.50 and start aiming, if not actually testing, the 144.40. It's a very interesting pair. My prognosis here is that the downward motion will be regaining traction soon, and that could be within the next 24 hours. At this point, I would be also noting on the fundamental level, despite NJPY weakness in today's American session, we're going to be also getting from the US two interesting indicators, and the initial jobless claims figure, which is expected to remain unchanged at 220K. While I would be also highlighting here the retail sales growth rate of the US, which is expected on a month-to-month basis to remain at minus 0.1%. I know it's very shallow, but the mere fact that the minus sign is to be preserved before the indicator's reading could weigh on the US dollar somewhat. Okay, let's have a look at the Aussie. I think the Aussie, along with USD JPY, had the widest movements. Yeah, only to the upside this time. And a very, very proud analyst here, which predicted correctly there too. Switching the 0.6620 from a resistance line to a support line, given that the price action has moved higher. And let's go hunting for a new ultimate resistance level. In red. $0.6895. Locking it in, readjusting the chart, widening it a little bit. $0.6820, the second resistance line. 0.6725. $0.6620. S2 at 0.6535. And the S3 at 0.6435. I think the bullish tendencies here are more clear, given that we had a clear breach of the 0.6620 resistance line out into support, and the pair continued higher to test the R1 0.6725. At the same time, we note the RSI indicator is clearly above the reading of 70. It's at 74. It's actually signaling a strong bullish sentiment on behalf of the market for AUD/USD. At the same time, it may be also implying that the pair has reached overbought levels and may be in for a correction lower. I would be actually mentioning here that the correction lower is already underway, given that the price action was able to breach above the upper Bollinger Band. Should the bulls maintain control as expected, we may see the price action of the also jumping above the R1 0.6725 and testing, if not breaching, the R2 0.6820. Now, on a fundamental level, I would be highlighting for Aussie traders the release of the Chinese data tomorrow for November, and I would be highlighting especially the release of the industrial output growth rate and the urban investment growth rate for the same month. Now, both rates are expected to accelerate. And if actually so, that would be indication of increased economic activity, especially about the manufacturing sector, and to a second degree about the construction sector. Those would be good signs, positive signs for the Chinese economy. And they could be lifting the Chinese yuan, yet may also have as a side effect a lift of the Aussie. And the main reason why here is because raw materials used in the Chinese manufacturing sector tend to be imported from Australia. And should there be an increase of economic activity in China, that could equal practically high exports of raw materials, especially iron ore and coal, from Australia towards China. In any case, should the rates accelerate as expected or even beyond that, that could be a positive surprise for the Aussie and allow the pair to push higher, breaching the R1 to test the R2. On the flip side, should a selling interest be expressed by the market for any given reason, I would require the pair to drop, break the S1 0.6620 and start aiming for the S2 0.6535. Next pair to look would be USD CAD, and we see a continuous downward motion. The interesting element in USD CAD is that there is no correction higher up until now in the 4-hour chart against the US dollar. So we have here, definitely we have to reverse the role, to switch the role of the S1 1.3535 from a support line to resistance line, given that the price action has broken below it, and also add a new ultimate support level. A 1.3085, the new ultimate support line. We are addressing the chart. Let's correct also the labels. Starting with the R3 at 1.3775, the R2 at 1.3620, the R1 at 1.3535, the S1 at 1.3405, the S2 at 1.3260, and the S3 at 1.3085. Once again, we tend to maintain a bearish outlook, and we're basing that practically on the downward motion, the clear downward motion of USD CAD over the past 24 hours, especially since the release of the Fed's interest rate decision. But also there is an indicator which is below the reading of 30. It's actually at 26.9. May also be implying that the pair has reached oversold levels and may be ripe for correction higher. We should note that, as we should also note that the price action is moving below the lower Bollinger Band, which may be slowing down the bears somewhat. Should the bears maintain control, as expected, we may see the pair actually breaching the S1 1.3445 and start aiming for the S2 1.3260. On the other hand, Should the bulls take over, we may see the price action rising, breaching the R1 1.3535. I would be also note the possibility of a breach of the R2 1.3620, even slightly. On a fundamental level, okay, definitely the drop of USD CAD was instigated by the Fed's interest rate decision. But I would be also noting here that we have rising oil prices, which may be providing some support to the Canadian dollar, given that Canada is a major oil producing country. And it's a big question here. Nevertheless, for the time being, I would expect fundamentals to continue to strengthen the CAD side of the pair. There's one small catch which tends to worry me a little bit here, and that would be the fact that the CAD as a commodity currency is also considered to be a risky asset. So should there be any turn towards a more cautious stance on behalf of the market, that could weaken the CAD somewhat. But for the time being, the bearish outlook, I think it's pretty clear that it's there, even with some possible correction higher. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another one of our videos. Today we'll have a look at currency carry trade. A currency carry trade is one of the most famous trading strategies in forex trading. A currency carry trade is when you buy a currency with a high interest currency against a low interest currency. Carry trading involves holding a forex trade when one currency has a higher interest rate than the other currency in the pair. The most famous carry trades involve buying currency pairs like the Australian dollar against the Japanese yen and the New Zealand dollar against the Japanese yen, because these pairs have interest rate spreads that are very high. A trader can make a profit between the difference in the interest rates of two currencies as long as the exchange rate between the currencies does not change. Many professional traders use these currency carry trades because the gains can be very big when they use leverage. However, the bigger the potential gain, the higher the risk. The currency that is exchanged in a currency carry trade transaction is known as the funding currency. A funding currency usually has a low interest rate. Traders borrow the funding currency and take short positions in the asset currency, which has a higher interest rate. The best time to get into a carry trade is when central banks are raising or considering raising interest rates. Also, these trades work well during times of low volatility since traders are willing to take on more risk. As long as the value of the currency doesn't fall, even if it doesn't move much or at all, traders will still be able to get a return. However, a period of interest rate reduction does not provide great gains in carry trades. When rates are falling, demand for currency also tends to fall and selling off the currency becomes difficult. Basically, the carry trade can result in a profit if there is no movement or an increase in interest rates. Hope you found this video useful and interesting. Thank you so much for watching us. Bye-bye.
Thank you guys for waiting. Let's go ahead and get started. So, as per usual, before we get started, a risk warning as well as a disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I will be your presenter for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here is our agenda for today. We're just gonna look at the anatomy of a trade, followed by a recap of what we talked about last week, which was dynamic take profit as well as stop loss placement. And then we'll get into this week's content, which will be on break even as well as partial profit. Okay. So the anatomy of a trade consists of the basics, which are mainly entry, stop loss, as well as take profit. But of course, there are other parts as well that constitute a trade, such as your break-even, partial profit, trading stop loss, as well as idea invalidation. So today we're only going to be talking about break-even as well as partial profit. But if you are interested in trading stop as well as idea invalidation, stay tuned for next week as well as the following week's webinar, where we'll go through those in depth. Okay. So just a recap. We typically advise you to place your stop loss beyond a major resistance area and your take profit before a major resistance area. Okay, so that's just the general rule of things. Okay, so let's get into break even. So break even in trading refers to the point at which a trade reaches a level where the trader has neither made a profit nor suffered a loss. So it's basically the point where the cost of the trade, including fees and commissions, is equal to the price at which the trade was executed. Okay, so for example, if a trader buys a stock at $100, right, and sells it at $110, the trader has made a profit of $10. But on the other hand, if the trader buys a stock at $100 and sells it at 90, obviously they've suffered a loss of 10. However, if the stock is sold at 100, the trader has neither made a profit nor a loss, and the trade has reached its break-even point. Okay, so that's in the context of stocks, but we'll talk about the context of Forex in a little bit, but it's kind of the same idea. So break-even is basically a concept in trading because it helps traders to determine the minimum price that they need to sell their trades in order to cover their costs as well as avoid a loss. Okay, so it can be helpful when determining when to close a trade and take the profits or cut losses altogether. Okay, so this is how it works. Okay, so break even is the level where you are in profit, which is over here, the first point. You're in profit, you recognize that there is a risk of reversal. So if you follow this based on the numbers, firstly, we have our entry, which is at this double swing high here, double swing high resistance over here, and then we are going in for a buy entry on this breakout of this resistance level. Okay, and we're hoping that price will push upwards towards our excuse me, towards our take profit level, which is this green area here. Okay, so we see price testing this area here, and then our break even is triggered at this break even level, which is just at this swing high resistance level. Okay, and then it reverses, it's triggered at this level, and then it reverses down, and that's where we modify our stop loss and move it from this original stop loss, which is way below over here, and we move it to our original entry level. Okay, and the reason for doing this is so that if price continues to rise, of course, we'll still get our profits. But if it reverses, we'll just take our profits and get out of the trade at break even. Okay, and you can see, even though it did reverse off and was kind of heading towards our take profit, it's a good thing that ultimately we had placed our stop loss here because price did reverse and hit it back down to our entry and stop loss. So if we had left it at this stop loss level here, we would have made huge losses, whereas here we're just getting out at break even. Okay. Okay. So now let's talk a bit about partial profit. So partial profit is basically refers to the practice of closing only a portion of a trade when it reaches a certain profit target, while leaving the remaining position open in order to potentially capture further gains. So the idea behind partial profits is to lock in some of the gains while giving the remaining position room to potentially continue to move in the desired direction. So basically, it's typically used when there is a strong resistance area and you are unsure if price will rise to take your take profit. Okay, if we look at another example, but in this example, we're talking about stocks and shares. So if a trader buys 100 shares of a stock at $100 and the stock rises to 110, the trader might choose to sell only 50 shares, taking a partial profit of $500, which is $10 per share times 50. So the trader would then still have 50 shares that are now worth $550 and could potentially continue to make profits if the stock price continues to rise. Okay, so in the context of trading, it can help you to manage risk by allowing you to take some profits off of the table while leaving room for further gains. It can also help to improve the average price of a trade if you decide to add to the position later at a lower price. However, it's important to note that you should have a well-defined plan for how you manage partial profits, as leaving too much of a position open can increase exposure to risk. Okay, now let's look at example number 1. Okay, firstly, we have our first support as our entry over here. And our first support is an overlap support, as you can see, with a couple of swing highs as well as swing lows testing that area. Okay, so that's a pretty significant area. So we see price bouncing off this area and we go in for our buy entry towards our take profit over here. Okay, looking at our Fibonacci, if you are not familiar with our Fibonacci techniques, I'll briefly go through them in a little bit when we look at our charts. But over here, we have a 38.2% Fibonacci retracement. So our starting point will be here, ending point here, 38.2% Fibonacci retracement, and then which is in line with this swing low here. Okay, and we also have a 78.6% Fibonacci projection. So that would have 3 points, and you can kind of see the shape here. And our 78.6 lines up nicely with this swing low as well as the previous Fibonacci retracement. Okay, so we expect price to rise to our take profit here. Of course, we are hoping that price will rise to this swing high pullback resistance over here. But of course, there is a strong resistance at this Fibonacci confluence area, and there is a possibility that price might not be able to reach our take profit. Okay, so we see over here that price indeed did react off of the strong resistance area at this partial profit level. Okay, and it reversed off of it instead of heading towards our take profit. So in this case, we were able to get out of the trade with a little bit of profits, even though the trade didn't go according to how we planned it to. Okay, pretty straightforward, I think. Next, we have another example here. In this example, we have our entry level at this swing low support level. Okay, and this is our entry level and is in line with a 100% Fibonacci projection. Okay, so for Fibonacci projections, we are looking for kind of a lightning or flash shape. So like a lightning bolt shape. Okay, and you see that, you kind of see that over here if you follow the shape of our our Fibonacci trend lines, okay, as well as the tail of the lightning bolt over here. Okay, so it's in line with our 100% Fibonacci projection, and we are placing our stop loss right below this swing low support. Okay, and our take profit is at this swing high resistance here. But as you can see, it is quite a bit of a distance between our entry and take profit. So we identify a break-even or partial profit area from this from our Fibonacci levels. So in this case, it's not only Fibonacci, we have Fibonacci coupled with a graphical analysis as well, because over here you see that we have two swing lows that line up nicely. So this makes it a pullback resistance level. Okay, and this pullback resistance is in line with 23.6% retracement, as well as another 38.2% Fibonacci retracement. Okay, so we have two levels lining up with a graphical level. Okay, so that makes it a pretty strong confluence area. Okay, so we've made this area our partial profit area or break-even area, and we are expecting price to bounce up and head towards, bounce off of our entry, and head towards our break-even. So you can see once price reached our break-even level, we were able to get out of the trade, but also be able to get a little bit of our profits. Okay. And in this case, because we are using a break-even as well, so not only did we get our partial profits, we are also moving our stop loss to our entry level, so that if it reverses off of this confluence area, we can get out at break-even. Okay, and you can see that that's exactly what it did. Okay, so this is the level in which it triggered our break-even, basically telling us that there is a chance of reversal, and then when it's triggered, in other words, when price reverses off of it, then we can quickly move our stop loss to our entry so that we can get out of the trade at break even. Okay. Okay, that's all for my slides. Let me know if you guys have any questions, but now we're gonna use the remainder of the time to look at some charts. So if you guys have any requests for any charts, feel free to let me know in the chat. Okay, let me just pull out my charts. Okay, let's go ahead and take a look at gold first. Okay, so as per usual, I like to look at the higher time frames first so that we get an idea of where prices are headed towards. Okay, and you can see that price is pretty bullish over here. Okay, let's look at our daily time frame. Okay, our daily time frame is also clearly on an uptrend. Okay. Okay, now let's look at our 4-hour time frame. Okay, you can see that there is a very obvious uptrend here as well. Okay, let's see. So we have an ascending trend line here. Let's see if we have a trend channel. Okay. Okay, now let's go in with our support and resistance levels. Okay, so here is going to be my first resistance. Oh. Okay, just a second, let me connect my mouse. And then our first support maybe just here. Okay, so we always want to try and pull it back as far as we can. And I'm going to place my second resistance here. Here, so firstly, I'm going to go in with a Fibonacci extension. Okay, so for Fibonacci extension, we're basically looking for this kind of shape. So this like tick, Nike tick shape. Okay, so this the tail of your tick has to exceed 100% of the head. So it's basically looks like this before you can use it. And we can see that price did reverse off of our first resistance, which is in line with our 161.8. So it doesn't have to line up exactly, just as long as it's kind of near that area, that's good enough. Or actually, let's take it from here. Okay. Okay, next, I'm gonna go in with a retracement. So for retracements, we use these 5 levels. Okay, and I can see that my 38.2 lines up with my first support. So I'm just going to keep that. Okay, now going in with a projection. So for projection, we use these 3 levels, and here I can see my 161 lines up. Actually, if we use this. So you should try your best to follow the shape of the chart as far as possible. Okay, and for extensions, just to recap, you are looking for kind of a lightning bolt shape, as I mentioned earlier. Okay, something like that. Okay. Okay, we have another one here. Okay, I think that's all the levels that we have. Okay, so now let's go in with our indicators. So I'd like to start off with Ichimoku and MACD because at one glance, it tells you exactly what the signals are. Okay, so Ichimoku, you can see price moving above the cloud. So it follows our bullish signal. MACD is also giving us bullish. Okay, and then let's take a look at RSI. Yeah, RSI is also moving in an ascending trend line. Let's take a look at Bollinger Bands. Okay, you can see over here that that it's breaking out of the upper channel. So it's even though there is a reversal here, okay, we can expect price to continue pushing outwards. Okay, we are this reversal could be because of this confluence area here, okay, at our first resistance. So we see, as I mentioned earlier, we see that we want to pull back your lines or your levels as far as possible so that you can see how significant these levels are. And you can see that price has tested this level many times before. Okay, you can see here, managed to break out of it like once over here, okay, but still pretty strong resistance area. Okay, so it's not a surprise that we are seeing price kind of respecting that area right now. Okay, but we're expecting it to still continue in this upward trend. Okay, so that's for gold. Let me know in the chat if you guys have any requests. In the meantime, let's take a look at euro. Okay, so on our weekly time frame, okay, it does look like prices are rising recently. Okay, after this downtrend over here, there is a bit of an uptrend after the 9th of October. Okay, now let's take a look. Our daily time frame also pretty bullish. Okay, you can see. Okay, no. Let's see if we have a channel. Okay, no. Okay, but pretty bullish here as well. Now, definitely uptrend here on our 4-hour time frame. Okay, I don't think we have any trend lines or trend channels, so let's just get into the support and resistance levels. Okay, so this, I think we'll place our first resistance here. Okay, because it's a overlap level, and this price has tested this level many times before. Next, I'll probably place my first support over here. Okay, and then I'll place an intermediate level here as well. So this is my intermediate support level. Okay, and now it's a support intermediate level because it's very close to where price currently is at. Okay, no, I'm gonna place my first support here instead. Okay, so if price reverses off of our first support, then we can go in for the buy entry. My intermediate resistance is here instead. Okay. This is purely graphical, so it's just by looking at the charts and looking at where exactly price has tested the levels before. So after we do this, then we go in with our Fibonacci levels. Okay, so the easiest one to identify is the retracement. Okay, so once again, retracement, we use these 5 levels. Okay, so even though our 50% lines up with my second resistance, as well as my 61.8 lining up my first resistance, is no longer valid because price has already broken those levels. Okay, yeah. So I might just keep the 78 for reference. So we can place it here instead. Okay, at these swing highs here. Okay. Now if we zoom in, I think I see another Nike tick shape here. So I'm gonna pull out my 127.2 and 161.8. Okay, and we see that okay, I'm actually gonna move our intermediate level to these 3 swing highs here. Okay, in line with the 161.8 because price has already broken the 127.2 as you see here. Okay, so you can see it's really the first support and resistance placement is purely graphical. We go in and adjust it later on. Okay, my 78.6 lines up with my first support. Oh wait, this is no longer valid because price has already broken out of it. Okay, let's see what else we have. Maybe if we take this big shape here. Okay, my 100% lines up, even though the 78.6 did line up earlier as you saw, but price already broke it. Okay. Okay, so we're going in with a buy towards our level over here. Yeah, towards the 161.8. Now let's take a look at some indicators. Okay, price is moving above our Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so all of these support our analysis. And let's see. RSI isn't really telling us much. Stochastic is giving us a bullish signal as well. Maybe let's look at Bollinger as well. Okay, we can kind of see Bollinger breaking above the upper band as well. So it is also giving us a bullish signal. Okay. Okay, we have a request for AUD. Okay. Oh, the Aussie dollar is on a weekly time frame. There is a downtrend, but in recent times it looks like it's been going up. Let's look at our daily time frame. Okay, it looks like it's going up as well. And 4-hour time frames we saw also looks like it's going up. Okay. Let's see if we have a trend channel first. Yes. Okay. Now let's go in with our support levels. Mm, Here's my first support, and then second resistance maybe over here. Okay, just here. Okay, now let's go in with our Fibonacci levels again. So here I'm looking for a retracement. Okay, I see my 61.8 lining up with my first resistance. Remember, even though this 50% lines up, it's no longer valid because price has already broken out of it. Okay, 50%. Oop, 61. Yeah. And then okay, there is a slight tick shape over here. So let's see if we have any levels. Okay. Okay, but price has already broken these levels, so it's no longer valid. Okay. Okay, I don't think we have any other levels here. Yeah. Okay, so let's just go in with our indicators. Okay, so same thing, Ichimoku, MACD, both giving us bullish signals here. If we look at RSI, RSI isn't really telling us much. Let's look at stochastic. Okay, not really telling us much as well. Let's look at Bollinger Bands. Okay, we see we do see price breaking above the upper band. Okay, so it does support our analysis. Let's look at our moving averages. Okay, I'm gonna hide our Bollinger Band so it's easier to see. So we see price moving above both of our moving averages, but it does look like it's moving below now the simple moving average. Okay, but it's still moving above the EMA, so that's fine. And price hasn't crossed over each other yet, so that's still fine. Okay. So we are seeing some resistance over here because of the Fibonacci, this Fibonacci level. But we're still expecting it to continue to rise up towards our second resistance, following the upward trend and still moving within this ascending trend channel. Okay. Okay. Shall we look at WTI? Okay, so on our weekly time frame, prices are kind of ranging. Yeah, there's no clear trend here. On our daily time frame, it does look like it's dropping. Forwards looks a little bit, I don't know. We do have this price breaking out of this ascending trend line, or rather descending trend line. Okay. We do have price breaking out of that. Yeah. Let's see if we have a channel. No. Okay. So we're just gonna continue our analysis and then we'll see what our Fibonacci levels tell us. Okay. So firstly, here we have our first resistance. Okay, I can pull back my first resistance. Next I have a second resistance, which is just here. Can pull it back. Okay, second resistance, and then lastly, first support maybe just here. Okay, so let's see if we can pull any of these levels back. Okay. Okay, here. First support here. Now let's go in with our Fibonacci levels. Okay, firstly is my retracement. Okay. Okay, my 50% lines up and Okay, my 23.6 as well as 38.2 line up. So let's just keep those. Okay, and then I also have this flash shape here as well. Okay, so we can go in with our projection. Okay, and we can see that my 61.8, ooh, okay, we can see that my 61.8 lines up with my second resistance. Okay, but that's no longer valid because price has already broken it. So let me remove that. Okay, I think that's all the levels that I can identify so far. So let's go in with our levels again. So Ichimoku is giving us bullish, MACD is giving us bullish. If we look at RSI, okay, it's also moving in this ascending trend line, so it's also giving us bullish. And then let's look at Bollinger Bands maybe. Okay, you can see price breaking out above the upper Bollinger Band as well. Okay, so that is a bullish signal as well. Okay. For this chart, I think confirmation would be if price manages to break above this first resistance. So because there is, you can see our first resistance is a pretty significant level. So we will be seeing some resistance over here like we have seen in the past. So if we get and we also have this 23.6% Fibonacci retracement that lines up with it. So if price manages to break above this level, that's confirmation that we can go in for buy towards our second resistance. Okay. Okay. Okay, someone requested for DXY. Okay, this will be our last chart for today. I think that'll be all the time that we have. Okay, so on our DXY, we see prices dropping. I think we have a descending trend channel here as well. But you can definitely see a downtrend here. On our daily time frame, also pretty there is a downtrend, and then on our 4-hour time frame, we don't have any trend lines or trend channels, I think. Let's try. Okay, no. But we can all agree that it is a downtrend. Okay. Okay, so then let's go in with our resistance and stop loss levels. So first resistance will be here. Can we pull it back? Yeah, okay. So our first resistance will be there. And then first support. Okay, and so our stop loss would be roughly about here. Okay. Okay, now let's go in with our Fibonacci levels again. So you can see it's pretty methodical. Okay, 50% lines up, my 50% is no longer valid. Okay, so my 61.8 lines up. Okay. Over here, 78.6 lines up, and so that's my 100%. So let's just keep that. Okay, and I think that's all the levels that we have. Okay, I have a 78.6 there as well. Okay, and I have an inverted Nike tick here. So it's like this. Okay. I think that's all the levels we have. Yep. Okay, now let's go in with our indicators. Okay, price is moving below the Ichimoku cloud, so it supports our bearish signal, MACD as well, and RSI and stochastic. Okay, stochastic is moving in this descending trend line. Oop. Okay, whereas our RSI, oop. Let's see. Okay, RSI is also moving in this ascending trend line. So pretty bearish signals here. Bollinger Bands also moving below the lower band. Okay, you can see that here. So also supports our bearish signals. So we would get confirmation in this case once price breaks out of this first support, because our first support is a pretty significant level again. Okay, it's a pretty significant level, and we also, in this case, we have two Fibonacci levels. Okay, yeah, we have two Fibonacci levels, which means that it's a confluence area, which typically would have a bit of resistance in that area. So we are seeing price bounce off of this level, but because of all the downward pressure, we would expect it to continue downwards towards our second support. Okay. 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 Okay, we have a question. How much do you calculate the stop loss and take profit? So it typically is the general rule for risk reward ratio is about 1 to 2. So you use a factor of 1.5 for determining your stop loss target. I personally don't calculate based on that. I would calculate based off of the confluence areas as well as the levels instead of having a fixed number of pips between our stop loss and take profit every time, because for each chart it's different. So you can't really apply the same number for each chart, if that makes sense. So I would just follow this rule where we, over here, okay, where after identifying the resistance area and the take profit and stop loss levels or the confluence areas, whatever you have identified as a significant area to take note of, then I will go in and place my stop loss beyond it and my take profit before any major resistance area or confluence area. So I typically will follow this instead of the usual risk reward ratio. Yeah, but if you are interested in that, yeah, I think we have other webinars about risk reward ratio as well. Okay, that's all the time I have for you guys today. Thank you guys so much for joining me. I hope you guys found this helpful, and I will see you guys next week. Have a great rest of your week, everyone. Bye.